Hey friends, this is Atif here. Well, and welcome to the new update on gold. And as we have already seen that the gold has reached highest price ever in the history of gold, and that is more than $1,980. So in today's video, we will try to understand whether the price action will continue to grow or it will be moved down and the bubble will be burst. So let me take you to the live chart, and this is a long-term weekly chart. We can see that first the price action reached at the highest price ever back in 2011, and that was $1,920, and the price action found a resistance here, and that was the $1,912. Because at this level we had several touches, therefore we found a resistance at this level, and the price action moved down and found a support at $1,061 and moved up and reached at the resistance level in the previous week, and after that the price action moved up, failed to break out this resistance, and moved up again in the next week, in the current week. And this week it reached more than $1,981. That was $1,981.20. And we can see that at this time the price action is struggling at this resistance, that is $1,912. If the price action will be closed above this level, then it can turn more bullish. At this time, the price action technically did not break out this resistance level because we don't have even a single candlestick that has been closed above this candlestick. We have just a spike above this resistance level. Now, if we watch, for example, the different indicators, this is the MACD indicator, this is the stochastic, and this is the momentum indicator, and this is the RSI. For example, let me take you back in 2011. At that time, when the price action reached at the highest price ever in the history of gold, then we can see that after reaching at this level, the MACD started turning bearish from bullish, and we also received the bear cross. This blue line crossed down this red line, and for the people who don't know, I would like to tell them that whenever the blue line in the stochastic indicator crosses down this red line, that is a bearish signal, and whenever this blue line crosses up this red line, the bearish line, that is the bullish signal and buying signal. So we received a bearish signal, the sell signal, and finally you can see that the momentum started turning bearish. It was strong bullish, and it turned weak bullish from strong bullish, and the RSI, the relative strength index, also started moving down, and after that the gold started moving down and never turned back to this level. And after that, finally this year it has reached at the same level, and that is $1,912. That is the resistance level, and at this time it is at the resistance and struggling to break out this resistance level. So in today's video, I'm just giving you some facts and figures, and based on those facts and figures, I'll just give my opinion, and that can be taken as an educational purpose only, entertainment purpose only, and you can also have your own opinions and research work as well. Now, let me tell you that back in 2011, this is the back in 2011 up channel that the price action formed on this weekly chart. This is the long-term analysis I'm giving you. The price action was moving in this up channel, and finally when the price action reached at the highest price ever in the history of gold, then we can see that the price action broke out this resistance of the channel and retested the previous resistance as support, and moved a little bit up and moved down and failed to retest this previous resistance as support and re-entered in the channel. After reaching at this support, the price action moved up again at the resistance and failed to break out from the resistance and moved down and broke down this support of the channel and never turned back. And at this time the price action is at the same level again and trying to break out this resistance level. Now if we move to the live chart, to the current chart, then we can see that the price action has formed same as like the previous up channel, and finally the price action is breaking out this channel. I'm not saying that this resistance of the channel has been broken out, because we have the opening point of the candle above this resistance of the channel. So far we don't have any candlestick that has been completely closed above this resistance. Once we will have the closing above this resistance of the channel, then we can confirm that the price action has successfully broken out this resistance. At this time this is the decision making candlestick. For example, if we will have the next candlestick above this resistance of the channel completely closed and open above this resistance, or this candlestick will be closed above this channel, then we can confirm that this resistance has been broken out. Now if we watch the next chart, and on this chart we have the 25 simple moving average, the 50, 100 and 200 simple moving averages. We have a complete open alligator mouth by the simple moving averages, and they are lifting the price action up in a parabolic way. And if we watch the previous history, for example, if we move back to the 2011 again, then at that time the simple moving averages in a same order was moving up and lifting up the price action in a parabolic way. We had the 25, then 50, then 100, and then 200. Whenever the smallest time period moving average is above all, then we have the bigger one, then bigger one, and the biggest time period moving average below all. So this is called an open alligator mouth by the simple moving averages. I'm not talking about the Bill Williams alligator indicator. I also use that indicator as well, but the moving averages of Bill Williams alligator indicator are very small, 5, 8, and 13. Therefore, they can give sometimes false signal. Therefore, I normally use these set of moving averages, the 25, 50, 100, and 200. But when I use the Bill Williams alligator indicator, I use with this combination of some other chart patterns and the different indicators as well. Therefore, I always suggest you guys to use the Bill Williams alligator indicator with the combination of some other indicators to avoid the false signals. And we can see that at that time we had the same order of the moving averages back in 2011, and they were lifting the price action up. And finally, the price action moved at the 25 simple moving average, retested as a support, and moved down, retested the 50 simple moving average, and moved down at the 100, retested the 100 simple moving average, and moved a little bit up, and moved down, and broke down even 200 simple moving average, and never turned back. But at this time, we are in this situation, that the moving averages are very strong bullish at this time. Now let me to show you another very important move that the price action can make, and that is the formation of cup and handle pattern. For example, let me do move it to the monthly chart, then it will be easy for us to watch this move of the price action. You can see that after dropping down back in 2011, when the price action moved up, so this complete move is a very in a round shape without any hard corners. And let me to play some pattern tools. Then we can see that the price action moved down and moved up in this way. And for example, if the price action will be not able to cross up this resistance level, because it depends on the closing of the candlestick. Once we will have the closing above this $1,912, then we can consider that the price action has broken out this resistance. For example, if the price action will not break out this resistance, as we have already seen that in the previous week, the price action moved at this resistance level and dropped down, and now it is trying to break out this resistance level again. Let me just show you the, on the weekly chart to make it more clear. You can see that the price action moved up to this resistance level and moved down, and in current week we have a very strong spike even beyond this resistance level, but we don't have even a single candlestick that has been closed above this resistance. Therefore, this is a really very strong hurdle for the price line to start the next rally. The price action at least have to break out this resistance on the weekly chart. Now I'm moving back to the monthly chart. Now, if we watch that, this is the support and this is the resistance of this cup that is at $1,912, and we have the support of the cup at $10,000. This is $1,061. And if we place this Fibonacci retracement tool from this support of the cup up to this resistance of the cup, then we can expect if there will be a pullback, then the price action can move back to the to complete this handle of the cup, because this is likely to be the cup and handle formation. If the price action will be failed to break out this resistance, then we can expect that the price action can move down from at least 0.382, that is somewhere around $1,600, to 0.618 or 0.786 Fibonacci retracement level, that is somewhere around $1,230. And from here, the price action can again move up and break out this resistance of the cup, and also break out this resistance of the, this is the resistance of the handle, and this is the resistance of the cup. So this is basically a bullish reversal pattern. That is not a bearish pattern, that is a bullish reversal pattern. So this is very good sign, positive signal. For example, if the price action will have some pullback, it will be moved down, then it can from this area it can move back, and that will be really very powerful bullish rally. Even the price action can break out this resistance of the cup again, or at least it can make another attempt to break out this resistance of the cup. So this can be happen if the price action will be not able to break out this resistance. Now let me to take you to these indicators again. We have received a first bearish signal at this time. If we want the stochastic indicator, then we have received a bear cross. This blue line has crossed down this red line. So this is the first bearish indicator on this weekly chart. And after that, if we will receive again some more bearish signals by the MACD indicator, for example, if it will be turned weak bearish, bullish from strong bullish like it was turned here. And finally, when we will have this bearish signals by this momentum indicator, and all these three indicators will give us the bearish signals at a time, then we can consider that finally the price action is going to move down for the completion of this cup and handle, the expected cup and handle formation on this weekly or monthly chart. However, if the price line will be closed above this resistance level that was formed back in 2011 on this weekly chart, then we can expect that the price action can start the next powerful bullish rally. So this was my personal research work and analysis. And what do you say about my analysis on the gold prices? You can share your opinions, your questions, and your comments in the comment section with me as well. And I hope that you have liked the video. Then do hit the like, do subscribe to my channel. Take care. Goodbye.